Hello guys and girls, and welcome back to another episode of Quick Tips. In this episode we're going to be focusing on forecasting and a few quick tips that I think is going to help out with that process. So firstly, with forecasting we have to understand the importance of actually why do we forecast and why is that important within Falcon? Well, it's all to do with the psychology. One of the biggest reasons why people struggle within trading is because they hesitate, right? It's quite common that a lot of people, when they take trades, sometimes they take a loss, and then what happens is they'll look at a particular position and they will hesitate, and then that trade will play out. It's not in the losses that normally affects your overall consistency. It's actually your failure to plan ahead enough to take the win. Purely because in trading, the losses are always going to be there, regardless of how good of a trader that you are. So why forecast? Well, what happens is in your mind, in your subconscious, you're programming that supercomputer. So when the market plays out a few different types of scenarios, it could be 1, 2, or 3 different scenarios, you can act accordingly and that hesitation is reduced. You want that to be reduced as much as possible. Think of it from this perspective. The conscious mind is absorbing 2,000 bits of information per second versus the subconscious 4 million bits of information per second. By forecasting, you're training your subconscious, and the best traders are the ones that plan in advance. So let's take a look at that and a practical step that's going to really help you forecast so you understand exactly how to do it with a few little tips. So let's say, for example, on Kiwi Yen right now. Now, when we forecast, it's easy to use the paintbrush tool. Of course, it's a really easy process to use. You can use the polyline tool as well, but I prefer to use the paintbrush. When looking at it, you're anticipating before price something like this. Let's say, for example, we replay that to here. When we're looking for a particular trade to play out, we're looking at it here and saying, right, we've got the double bottom on this particular area, and then we have this essentially 1, 2, 3. We're looking for a potential break. We know the overall structure is that bigger descending channel, and essentially we have a descending channel within it. So we've got a pattern within a pattern. So we're either looking to take this trade here, or we're looking for a hover here, or we're looking for an impulse, a correction, and a continuation. So naturally, before that happens, you're going to draw that on, because then your mind is getting used to, once that happens, it knows what to do. You're able to actually execute that rather than hesitate. So we look as an impulse, and we look for a correction, and then a breakout, a correction, and then a move to the upside. Now, we may not get the hover, we may just break straight through, create a continuation, and a move to the upside. Now, subconsciously, it's very normal for me because I've been doing it for so long, I can just draw impulse, correction, impulse, and I know exactly what to look out for. But when you're actually forecasting in the earlier stages, you need to draw on exactly how that plays out so there's no confusion. So let's say, for example, this speeds up so you can see exactly what I mean. So we speed this up, we get the impulse out. Now we need a continuation to confirm this move to the upside, which is actually a trade that I'm still looking at the moment. So we go to the 1 hour chart. So when we go to the 1 hour chart, we can look at this. We can see that we've got the move out, and now we're looking at the continuation pattern. So beforehand, when you're drawing it, you're not drawing it in the sense that you just have an impulse and a correction and move to the upside. That essentially is correct, but what happens when you get 1, 2, or 3? You're not sure what you're looking out for. You're just saying that it's an impulse and a correction and move to the upside. That's just how the market works. It's really the intricate little detail that seems so obvious, but yet people hesitate. But once you do this, you're practically going to start drawing on exactly what it looks like. So when you see an impulse, you're actually going to draw on that's congruent with your plan. First touch, second touch, which would likely be near a double bottom, and then a potential third touch and looking for that risk entry. So you're actually drawing on what the flag looks like, putting on the risk to reward tool like this, and then saying to yourself, right, it would likely be 25 to 30 pip stop. Once the market gets to that third touch, I'm going to put an entry on. Once it gets to the top of the pattern, it will be about 1.7, 1.8. To the high, it will be about 2.8. And then our first target and that inflection point on the trend line is about 5.6. So even by doing this, talking out loud, you can even record your own voice. What you're doing is you're practically preparing your mind for when that happens for you to execute. It seems like such a little detail, yet people will hesitate. But once you do this, It's not going to happen straight away. After repetition, it's like a bicep curl for your brain. You're training your mind to be able to do that. So when the positions arise, you haven't just drawn a squibble, an impulse and just a squibble. You're actually drawing exactly what is in your plan of how you're going to execute it. So when we're looking at it here, how do we bring in the override? We can't just say a third touch. What does that look like? So when we're looking at something like this, where is our override? So when I'm drawing my forecast and drawing the pattern in my head and on the screen here, I'm also looking at this. 1, 2, ideally, this is where I want to enter the trade. I want to enter it here like this with a risk entry, move to the upside 3.3, out of structure about 5.2, and then so on, right? But I'm also well aware we don't need to make it to that third touch. And what we could do beforehand is actually create the double bottom, and we can go from here. So this is the override, 1, 2, 3, and you need to reflect that in your forecasting, because then what happens if you're only waiting for that third touch? Then what about when this happens and then you see this trade impulse, maybe even create another possible entry, but let's say this is already gone and it impulse to the upside. You'll be sitting on the sidelines thinking, do you know what, that trade still kind of makes sense to me, but I'm not really sure how to take it, or I didn't forecast it, I wasn't really prepared, I was hesitating. It's because of this. When you're doing this actively, what happens when you normally would hesitate, you'll execute, because you'll realize this is what happens. You'll see 1, 2, 3, I would like the third touch, but if we get the double bottom, as soon as we get the retrace candle or any corrective nature, I'm going to enter off of the double bottom. So you're just training your subconscious. It's a little detail, but yet it's so powerful. And even going that one step further now in the live condition, seeing that double bottom, we've got the impulse. Now what would we need? We would need a continuation, 6 to 8 hour flag, and then we can look for that continuation. Once that happens, we will look for a buy setup here, stop above, just below the correction, and then we know when we get here it will be about 1.8, and then the first inflection point for about 4%. By drawing that, rather than just drawing some arrows and saying more upside, that's not enough. You literally have to see it like this in your mind. You have to visualize, well, when it looks like that, how am I going to react? When I see that, I already know, I already visualize. As soon as that happens, when it gives me that confirmation, I'm filling out the deal ticket. I already know in advance because I've practiced it, I've forecasted it, and I've trained my mind to do that. It seems like such a little detail, but yet so effective and so powerful for the trading. So we have our one forecast, and then we can take it one step further and say, well, we didn't quite make it to the third touch, so we don't get a continuation, and it does find its way to trickle back like this. When we get that descending channel like that, any kind of corrective nature, even a retrace candle, I'm looking to enter there. And then you put that on like this, and you size up the risk to reward of what it will be. So you already know in advance exactly what your stop will be, like this. What I used to do is I used to know roughly, like, right, this is the area that I'm looking to take a trade, when I would just be looking in the markets. And then what would happen? I didn't plan my stop. I didn't plan roughly what I would need to do. I just knew in that area, that would be a pretty good trade. I'll look at it then. And then what happens is when it's in that area, I'm overthinking it. I'm sitting there for 3 minutes thinking, should I take the trade? Is that actually a setup now? And you start overthinking things because you haven't planned in advance. When you're trading, especially when you're trading bigger capital and you're scaling your account, there is no room for those type of bad habits. That's only going to send you in a downwards direction. You need to build this skill now, even if you're trading demo. Build the skill now. You'll thank yourself later on. And even when looking at the forecast, we can always look left within the pattern, see how it previously played out. Impulse, flag, upside. Impulse, flag. This could be the one that breaks. So we're looking for similarities, even within our forecasting. Look left and forecast those. So I hope that helps, guys and girls, with that quick tip. An actionable step of what you can actually do is save your forecasts in a folder. Just a before and after. Literally keep it as simple as possible. You can literally save your daily chart and the 1 hour chart and literally do a before and after, see how it plays out. The daily chart you don't really need to take again. It's more so the 1 hour chart, but you just have the first screenshot with the daily structure, and then you have a before and an after of the 1 hour chart, and then you can see your forecast play out with the risk reward tool, with the flag. And remember, get used to on the 1 hour actually drawing on exactly what you're anticipating. When you're drawing a double top, draw a double top and draw an arc. Actually draw it breaking the double top with the arc, so you can anticipate when it happens. You're not there thinking, should I still take the trade or is it still valid? And it's little details like this that really do build up that strength into your subconscious, which is where you really want to be training, because that's where you're going to operate on that autopilot mode and hit those bigger returns, because you'll just be doing everything subconsciously. So I hope that helps, guys and girls. Have an incredible day, and I hope you've enjoyed this episode of this quick tip, and I really look forward to seeing you trying it out. Take care, and I'll speak to you all soon.